Hello and welcome back. Let's welcome in our next guest on the show. Anjani Kumar, partner at Deloitte India, is with us. They have done a survey regarding the FDI opportunity in India, sectors, destinations that can attract flows. Thanks so much for being with us. Could you just first start by which sectors are seeing the maximum FDI inflow, especially in the post-COVID world, as per your studies?
Hey, thanks, Ajay, for inviting me to the show, and a very good afternoon to you and your viewers. So, Ajay, what we've done is we've spoken to about 1,200 odd MNCs across 4 countries using the online survey. And what we are hearing from them is there are 4 key industries which they've identified as in their investments are likely to flow the highest in India. Those are utilities, financial services, healthcare, and consumer products. So those are some of the sectors where we've heard significant amount of interest from the investors and from the MNCs that we've polled as part of our survey.
Right. So let's take it ahead. What are the precursor as far as these deals are concerned? What are the conditions that are needed to attract big FDI flows from here on as well?
So, when we've spoken to these MNCs, what has clearly come out is the growth that India offers, the skills that India offers, is amongst the highest when they compare it with some of the other countries. So that is something that really attracts them. And there is a clear segmentation. As I said, we've done it across 4 countries. This is US, UK, Singapore, and Japan. And there is a clear segmentation of the countries. When we look at specifically US and UK, there is a much higher propensity to invest in India, both from MNCs who are already in India and they're looking at reinvesting, as well as new investors. Whereas we clearly see Japan and Singapore having slight hesitation. And when we've when we've delved deeper and done a double click on what are the concerns, what are the issues that they have, clearly I think 2 or 3 issues came out. One is clearly the perception. And again, this is also highly correlated with investors and MNCs in Singapore and Japan more than US and UK. The perception of ease of doing business in India, the perception of institutional stability in India is something that is holding them back. At the same time, we also found that MNCs across Japan and Singapore, more than US and UK, also had lower amount of visibility into some of the initiatives that the government of India has launched. So whether it's custom clearance digitization, whether it's the PLI schemes, whether it's Make in India, whether it's Atmanirbhar Bharat, there is not that high amount of visibility amongst these MNCs. And what we also did was, when we spoke to them, we also ran these MNC executives through some of these schemes that the government has launched. And there was a clear correlation of increase in intent to invest as they better understand what the government is doing and how ease of doing business in India is getting better as compared to historic situation.
Right. So you gave us a very interesting perspective about what talks you have done with various MNCs. But these are of course ease of doing business, perception that way. But what has changed on ground? You think China one is important? You think policies that states that particular areas are facilitating are also on the positive side? Plus they believe that demand from Asia or other emerging markets could be higher. Is that also a reason, or what are some of the other reasons for this capex apart from the government intent?
Yeah, absolutely. I think China plus one is clearly important, whether it's de-risking your global supply chains or it's about de-risking the current geopolitical situation. But I think there is also clearly that we are seeing a tilt towards Asia. As we speak to more and more MNC executives, they do see this decade as the decade of Asia and growth of Asia. So tapping into the consumers in Asia and getting a disproportionate share of that consumer market in Asia is becoming very critical. And a good way of doing that is making those investments in the respective countries and also having Asia integral to your supply chain. So that's, again, a second factor that we are seeing that's become critical. Also, I think as you look about diversification, and as a lot of MNCs across the world are also trying to get away from concentration risk of being dependent on a few geographies. So those are the three prime reasons that we are seeing for what we are calling a tilt towards Asia and significant investments. And we believe, based on our conversations, India is really well positioned to capitalize on that tilt towards Asia.
Right. A lot has been done. A lot of policy changes right from 2019 with the tax cut has continued to happen. But a lot also can be done. There is always scope for further improvement. Any other suggestions that you have which can attract these flows in a much faster way?
Absolutely. So one of the things, Ajay, that we focused on the survey was looking at only the merchandise trade. So if you look at India's share today in the merchandise trade, and I'm keeping services out of it, we are at about 1.5% of the global trade. We have the propensity to increase it to about 5% over the next 5 to 6 years easily. And when we've looked at merchandise trade, we've focused on 7 critical capital intensive sectors. And I think investments in these sectors will allow us to easily, take our incremental exports by $1 trillion. So our exports today on merchandise are about 290 billion. I think we can take it up to 1.3 trillion over the course of next 6 to 7 years. And I think what is going to be critical is, I talked about the fact that as business stakeholders and not just the government, I think all of us have to do our bit in making sure that the India story goes out. I think that's critical. From a government perspective, we've identified 4 key roles that we think that the government can play. And I think it is playing these roles. But I think just articulating them in terms of a creator, negotiator, facilitator, and enforcer, we believe using some of the principles of Industry 4.0 and putting them in trade, which we are now calling Trade 4.0, is something that will allow us as India to get a lion's share of the investments which are likely to come towards Asia.
Right. Just a last word. Does the capex cycle start with such sort of positivity? Do you think that the capex cycle will be lifted and that will attract more flows from companies that have not done capex in India so far because of the lack of capex cycle?
Yeah, I think that is critical. I think what our report says is over the next 6 years, we actually need a cumulative 8 trillion gross capital formation in the country to reach our target of 5 trillion as an economy in the next 6 years. So I think unless and until that gets kicked off and those shackles are lifted, and frankly, in our conversations with both organizations in India as well as MNC, we are seeing a propensity to invest. We are seeing some of those shackles being removed. You talked, I think, about the credit growth. So we're seeing all elements of that, and again, that will be a precursor to making sure that manufacturing, exports of merchandise becomes a critical element for us to get to our 5 trillion ambition.
Right, sir. Thank you so much, sir, for taking out time for us. Always good to get perspective from
Thanks,
you.
Ajay.
That was a view